The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tommy O'Brien, Darrell Martin. My dad is out on taking care of some stuff for himself today, maybe tomorrow. So Darrell and I will be holding down the fort. And Darrell Martin, good morning.
Good morning. How you doing?
I'm doing well, man. Quite a market to start things off after quite a market on Friday, right?
Yeah. So we had a great market on Friday.
Whew.
Big moves, and things started moving big last night, and it's just continued on.
Yeah. So we're the Dow right now is up 18, S&P's up about 4, Nasdaq's up about 16, and man, if you woke up this morning, you'd think we had flat markets throughout the weekend after after what we had on Friday, but that's not the case. I mean, even in the Dow, about 160 points in the last two and a half hours we've come back, and on the S&P, looking at 22 points. So maybe, Darrell, if we can start, where were we in terms of the deviation levels overnight? Not even overnight, I guess so, but even 2.5 hours ago, where were the deviation levels on the S&P 500 maybe?
Let's see. I don't have Nasdaq. I don't have up right now the Nasdaq. We had a full deviation move on the S&P.
That's what I would think, yeah, because that's you're talking about 25 points, right? Pretty much, almost, which is over 1%.
Exactly. Yeah. So it's a solid deviation move that we had out there, and I like those.
Yeah, right. Especially when they revert back to the mean, literally as the market even opens before the next trading day even ensues.
I know. Talk about a gap-filled day.
Oof. So if you haven't tried out the Nadex platform, folks, now is a great time to do it. Friday, some volatility is back in the market. We have the Fed meeting coming up next week, 9 days out, and of course, with interest rates looming, these indices are rocking. So what are you looking at this morning, or even on Friday? Let's talk about it as well. Because we did the show Friday morning, and then man, Friday afternoon, things just kind of fell apart.
I was set on U.S. yen, euro dollar, and Nasdaq.
Okay.
One of my main focuses on Friday, so they were moving really good for me.
Currencies and then the Nasdaq.
Exactly.
And then this morning, is that?
I pretty much stuck to the same thing.
Yeah.
So yeah, we've had plenty of movement on the.
Excuse me. And do you have? I'm not sure if you're in the den, Darrell, or not. I just can't see any of your charts. If you wanted to pull them up at all.
Yeah, I'm going to put them up in there in a minute here.
Excuse me. As I go through, so folks, if you want to try the Nadex platform, one of the things that we start off with, Darrell, maybe taking a look, where was volatility priced in some of these instruments this morning? We, with my dad being out, we were sending out so many newsletters, and of course, everybody on a day like today, those newsletters need to be timely. But what kind of volatility premium is in the market in some of these versus what was in there maybe even Thursday?
Right now, it's pretty much the same.
Is it?
So
okay.
They left the implied volatility really high, and anytime it goes up, they being the market makers.
Yeah, right. Just what the market is pricing it at.
Exactly. They're going to spike it up a little bit to protect themselves, and then we'll usually see a drop off if nothing changes. So as we get closer to the lunchtime hour. So
okay.
That's usually when
they want to let the morning sort itself out, which would make sense. You could find out a lot, I think, about what happens in the next 2.5 hours, right?
Exactly.
Yeah.
Yep.
Okay, so just taking a look at the S&P 500, and this is always interesting, where especially if you're just getting used to this market, Darrell, if you're getting used to the binaries, especially just seeing the kind of premiums that they have on whether it's from all the way from whether you're trading the hourlies, up to the weeklies. So right now we're at 21.22. And it looks like to get yourself a 3-to-1, you're going down to about 20.93. This is on the S&P 500 for a weekly binary. And on the way up, somewhere between 21.41 and 21.51 with the two strike prices. So, it's interesting that we just moved that type of a move in less than 2.5 hours, right? In terms of what's required for each of those sides. But for the whole week, they still have that priced relatively, I'd say reasonable, when you talk about the move that we just had. Do you ever look at
Right.
those weeklies, Darrell, in terms of directionally or volatility playing them like that?
I used to play weeklies a whole lot. Weekly options, in the vanilla option world.
Yes.
The thing is, I really just, with the binary options, you make as much in a week as you do in 5 minutes or an hour a day.
Yeah.
And so there really wasn't any I didn't see a trading edge
Okay.
for myself. And so I didn't see any kind of additional income for playing those.
Sure.
So I really don't play with the weeklies that often.
I think where it lends itself to me that I like it is that, number one, of course, it's defined risk, right, no matter what. And the week goes so quick, and I'm so busy during the day that I don't have a lot of time to be managing that type of a trade. Yet, if I want to make a trade, that kind of allows a small, limited risk trade that, I can set it, forget it almost, and not have to manage it, knowing my risk is, let's say, if I get in for 24 on one side, risking it to make 76, et cetera. Or even, we were doing a lot of those volatility trades with, buying the upside, selling the downside. And that's something you could do this week, as well, or any day, really, in terms of, it's funny. I was talking to my dad last Thursday, and right away I was saying, we've gotten such a tight range. I wonder if this would be a perfect time to just kind of, for the next couple weeks even, take advantage of the opportunities of trying to look for bigger moves on both sides of the market within the Nadex platform. And of course, we talked about it, but and then Friday came. That would have been quite a move on some of those products that they had.
Well, let's hit back on some ideas on how to play those weeklies when we get back.
Let's do it. I like them. Perfect. All right. Tommy O'Brien, Darrell Martin. Dow is positive. All the indices are positive. And it's Monday, and it's the Bull Bear Binary Option Hour. Come on back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Darrell Martin. It is the Bull Bear Binary Option Hour by Nadex. If you haven't tried out the Nadex exchange yet, now is a perfect time when you're getting 1% index moves in 3-hour spans. That's the time you want to be trading products with some optional movement. So like we're talking, Darrell, let's talk about options on the weekly basis. So talk to us about what you have in mind for the weeklies.
Well, I mean, you could do a, percentage-based move. I would be more inclined to do a little bit different play. I'd be more like doing weekly, sort of a iron butterfly, iron condor type strategy.
And if you can explain exactly what that...
The whole iron means basically to collect time.
Okay.
For whatever reason. That's just the simplest way to explain it.
Sure.
But it basically, you're like an insurance company. I'm going to issue an insurance policy. You don't have a wreck in a week, then I make money, right?
Yeah, that's why you don't like taking it on the other side, right? I know you like the shorter time frames because you're paying for whatever premium if you hold those till expiration if they're that far out. So
exactly, yeah. So on this, it's like, okay, if I think this is an acceptable, realistic range that exists for the market over the next week, that I think can stay or at least expire in between that.
Yes.
It may go out a little bit, but can it expire between it?
Yes.
Then, I could put a play on like that. I put it on both sides, and let's say I put it on both sides $25 each.
Yes.
Okay. So if I can make $25 on one side and I can make $25 on the other side, then means if profitable, I can make $50 on the trade.
Yes.
Right?
Yes.
If I lose on one side or the other side, because I can't lose on both, and that's a big key in what I'm talking about.
Yes.
Because it can either have to expire really high, really low, or in the middle. So I could lose 75. But if I lose on one, I will make money on the other. So
so you'd be risking technically, right, 75 on each side when you're initiating the trade, but because you have both of them, you're only missing it on one side of it. Is that? Am I following?
So only one side would actually be able to lose if I lost on the trade.
And this is like a 75-25 we're talking about, where you'd be risking kind of 75 because you'd be quote unquote in the money, right? It would be you'd be buying one with the way above the market essentially.
Exactly. Yes, I'd be buying one below the market.
Yes,
I'd be
I'm sorry.
selling one above the market. Yeah.
That was deep in the money, right?
And here's the key that a lot of people don't get, because they hear 25.75 and they're like, wow, that's a lot, right? That's a bad risk reward is what you hear. But if you do both sides, then one side is going to profit. Hopefully both sides will profit, and that's where you actually end up walk away with money. But one side is going to profit because either the market's going to finish, like I said, really high, and the one that you sold above the market's going to lose. It's going to finish really low. The one you bought below the market's going to lose, or it's going to finish in the middle, and you're going to win on both sides. Okay?
No, that's perfect.
So since one side will win as a fact, then you're going to make 25 on one, and worst case, lose 75 on another. So now you're going to net a worst case loss of $50. Okay?
Yes.
And if it is profitable, it'll stay in between the two, you can make $50.
So it's really a one-to-one.
It's a one-to-one play. And it's a one-to-one play that the market will stay where it is or move up or move down, but just not move too far. Even if it does by the end of the week, it will come back. Okay?
Right.
So if it stays flat, moves up, moves down, moves up a lot, or moves down a lot and comes back inside that range, you're profiting on a one-to-one ratio, which really is not a bad statistical play.
No, it's not. And I'm just taking a look at the S&P 500 weekly, same thing, I'm pulling them up. So, putting it, let's say 2105 right now, you could buy one at approximately 74.50, so right at that 75 mark. So 2105, you'd have yourself 23 points to the downside, and you'd be able to sell one for 24.25, almost the exact at 21.53. So you'd have almost 24, 25 points of movement in either direction on the S&P 500 with that, pretty close to that identical trade.
So, and I mean, that's a curious amount of movements. We're having that much already. So
yeah, I mean, it's one thing to put it in perspective, and that's what's awesome about when the markets are moving so much is really it's like, okay, you can either put it in perspective in the move that we just had in the last day and a half, which is wow,
right.
like that could happen in the next 2 hours, or you can put it in the perspective that that's more than a 1% index move, right?
Right now that's a 50-point move overall, 25 up.
Yes,
25
yes,
but yeah.
Just from away from where it is right now, you'd have to move. The market would have to close 1% away on a week, when really you could say that we're waiting for the Fed next week as well. So,
and some people will roll these.
Yes.
And they're basically just expecting a net number of them to be profitable. Okay. So like as it moves up, they'll roll up and they'll do another 25-25.
Okay.
If it rolls down, they'll do another 25-25. They basically expect it to finish somewhere just because more often than not.
So that's really constantly, basically, just saying that constantly you want to be like, if there's moving, that you're resetting the same trade and just recalibrating it almost.
Just a dynamic hedge.
Yeah.
Yeah. So I mean, that's going more advanced. But I mean, the biggest thing I wanted to point out was we were actually talking about a 1-to-1 trade.
Yeah.
And when people first look at it, they look like, well, I'm making 25 to risk 75.
No, that's a great lesson, man, because I don't even wrap my head around that in terms of just when you look at those numbers, you got to play a little bit of a quick mental trick on yourself just to do the math and realize that's the risk reward.
It's really a 50-50,
yeah.
But it's 50-50 on goes up, goes down, stays flat, or goes way out and comes back. I mean, there's a better than 50-50 odd that's going to happen.
Yeah, no, I think that's awesome, man.
So the odds of it being profitable are actually higher than a 1-to-1, but you're getting a 1-to-1 risk reward scenario.
Yeah.
So
no, we like my dad and I going into these earnings, especially just with the types of moves we get. Whether it's I say earnings, I'm thinking of the oil, the natural gas inventories, and similar to that. I'm sure we'll be talking about it leading up to next week with the Fed. And we'll see where this week goes, but there'll be some big movements ahead of when Yellen is speaking, of course, after their meeting next week as well. Do you have any plans on how, I know you love trading those events, Darrell, leading up to when she'll be talking? Are you trying to absorb those types of premiums, or are you trying to trade, are you doing something similar on a shorter time frame basis before the Fed comes out, or would you be looking at the other way around?
When she's about to talk, I'm usually going in and collecting premium.
The other way. Okay, you are, yeah.
The market's not very volatile while it's waiting because nobody wants to take a big position. So it'll pop up and then pop down and pop up and pop down. And, it's usually a very good time to, if you can get the premium, if there's even premium built in, because a lot of times it costs nothing because there's very little movement pre-talking. But now after she's talking, then, boom, it's huge. And so then I'll actually still look at the premium and I'll go, is the premium too much? Because a lot of times, even when on these big moves, NFP, I usually trade the premium in my favor. So, because I found that even with the big move, a lot of times now I do it on the spreads, not the binaries.
Yes.
Because I like that $1 one tick versus.
And that's that's really what most of the time that we're doing with the oil and the natural gas, the same type of thing.
Exactly. So.
Okay.
Yeah. So.
We'll keep talking about it when we come back. Perfect. Well, these markets are just continuing to climb. The Dow is up 58, S&P's up 8 points, Nasdaq's up 25. If you haven't tried the Nadex platform yet, folks, give it a try. You can get a demo account. They'll give you $25,000 of practice funds. You can be out here trying it just as we're trying it right now. Come on back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, Darrell Martin. Bull Bear Binary Option Hour by Nadex. And the markets are still up. Dow's up 60, S&P's up about 8, NASDAQ's up about 24. So it's interesting, Darrell, Europe and Asia were both down big last night, and they didn't have any type of a turnaround that we're getting in terms of this morning, in terms of seeing that coming at around 8 o'clock.
Yeah, what we're seeing right now is I have the chart for the NASDAQ up on my screen.
Okay.
It came down half a deviation last night. And then started out this morning, started heading up, and we're actually up a positive half deviation now. So from low to high, we're up a full deviation on the day.
Okay, maybe it loses a little bit of steam or has a little trouble getting some energy from these levels. I mean, quite a turnaround, really, when you look at the Dow almost down 400 points going into a Friday. And then somehow, you have Europe negative to the tune of, Asia down 1.7%, the Nikkei, Shanghai down 1.8%. Taking a look at Europe, DAX down 1.5%, FTSE down 1.3%, CAC Roll down 1.5%. So quite a turnaround for sure. And then oil's had quite a turnaround just from this morning as well. By the time my dad had sent me the newsletter, came out, oil was about $44.80, and now we just eclipsed $46.
Well, here is a very important note. Nadex, I don't know why. I've talked to them about this. But, okay, they roll, obviously, they have to roll their contracts to match future contracts.
Yes.
Right? And I wish they would always roll them after the future rolls, but sometimes they can't roll them on the same date because it's like a copyright date.
Yes.
It's weird. So they can't roll them on the same date. But I wish they'd always roll them like the Monday after. But like this week, they've already rolled them for the indices.
Okay.
Okay. So like right now I have up a September, but really you need to have up a December.
Okay.
Contract. So
great information, man.
An important thing to remember when you're looking at your contracts is make sure right there.
Everybody
that's
has
actually
their own charts,
standard.
and you're going back and forth for sure. And it says everything right on the Nadex platform, and that's why it's so important to make sure you're comfortable on the platform, going nice and slow, taking your time, making sure those details are important. And
they put it in the name of every contract.
That's what, and people can see it on the chart even right now. Wall Street 30 December, where I just happen to have the Dow up, US 500 December, so they put it there. But just like you're saying, when you're looking at the market and things are moving quickly, right?
But right now, most people would have up November because that's what most platforms are defaulted to.
Sure.
So you have to go in and you can edit it pretty easily inside most
you just need to
platforms.
change it. You just need to be aware of it.
Put the symbol in that you want to see.
Cool.
So all you got to do. But I just want to bring that up because it's one of those things that a lot of times people coming in aren't necessarily from a futures background, and so they're used to SPY.
Yes.
They're not used to ES.
Yep.
Z6.
No, for sure.
Or whatever.
And especially when you begin, if you're trading on such a short time frame, that could actually have some big implications.
Exactly.
For sure.
But going back to the monthly, you could do that, or the weeklies. That's what I used to do on monthlies, and so I went for a lot less money though. So which is pretty cool. That's one thing I like. I used to actually trade monthly neutral strategies, and I was going for literally like a mere 6%.
Okay.
A month. And that was before we had all these weekly options and daily options and everything else. But you can do the exact same strategies on a weekly and a daily basis.
Yeah, because you're really just playing volatility plays and judging it, based on what the price is worth, in your opinion, versus what basically the market is pricing it at for that instrument.
And
would that be right?
Yeah, 100%. Yep.
Yeah.
So it's like, what do you think it's worth? And, what do you think a deviation move is between now and then? And what is the expected move? And not only what is the expected move, but what is the expected end result? So I'll measure how far does the market usually move? Also, how far does it usually move close to close? So it may touch this level, but it usually pulls back to this level. Yeah. The market doesn't usually go in a straight line. So, and a lot of that, you can look at the VIX and everything and see how it's moving. But I mean, we talked about this about 4 weeks ago. We said expect things to get a little calmer and to pick up, and they did get a little calmer, but we still got quite a few volatility days around Labor Day, which is unusual that we'd get that much volatility around Labor Day. But right about now, this week, next week is usually when the volatility kicks back in, and it's already going full throttle.
That's what's even more interesting, I think, about this morning, just because really, with the market almost being flat. I mean, what do we have, 60 points right now? Being down 400 on a Friday, going into where things are supposed to be picking up, going into where you have, the Fed chairwoman speaking next week, and really that Europe was down 1.5% and Asia's down 1.5%. That was set up for a tough morning potentially.
Exactly.
Yeah. So maybe that's just delayed things a little bit. And I think it's option expiration this Friday. Is that right?
Do we get triple witching or is it just?
I think it's just option expiration. But I'm not sure. But it is option expiration, I'm pretty sure. So, that'll add some fuel to the fire if momentum starts to build as well, for sure.
Well, we have the pound interest rate coming out this week.
Okay.
That's coming out Thursday.
Okay.
So that'll be a big thing. China has a bank holiday on Wednesday. Let's see. I'm trying to see if there's any other big things happening. We got Draghi speaking tomorrow morning at 5 a.m.
That could make some news, some headlines for sure.
That can wake the market.
He likes to say a few things that make some headlines occasionally.
Exactly. Yeah. Like, we have unlimited money.
Yeah. Right. Something like that. The market would like that after being so worried about the rates in the U.S. right now, I think.
Oh, it looks like also Switzerland will be announcing their rate at 11 o'clock on Wednesday. So we got a couple rate statements this week. We got some Fed heads speaking.
Yeah. And they like to make headlines recently.
So, I mean, there'll be a little bit, there's a couple other things that are, medium impact. I look at things as a little bit different than how, if you go to Forex Factory, they'll rate things like low impact, medium impact, high impact.
Okay.
But they're rating them really on the impact on that currency pair as far as how important it is. Okay?
Okay.
So it may have a long time impact over the next 6 months or 2 years. This is a really important policy move. But it doesn't necessarily mean it's going to move it huge in the next 30 minutes. And that's where I think traders get confused on that. And so I look at them and I go, okay, what's going to move the market a lot? What's going to move it a little bit? And
that's the real question, right? For sure.
Exactly.
No, for sure.
I want to know, like right now, I'm a day trader. I want to know what's the impact on a current day.
Yeah, and it's almost like what does a trader perceive its impact as versus like what's the real impact? Because you almost don't care what the real impact is if the market isn't going to perceive that impact and trade off it like instantly.
Exactly. I mean, like the only main report that I look at for like a big, now I'll be watching markets for the other one, but I have one report here. Looks like I got the pound, and so they're going to have their unemployment rate, and so that usually is a big mover. So that's what I'll be looking at for like a straddle,
okay,
or a strangle, that's coming up, and so that it will be 4:30 on this coming. Let's see here. That'll be on Tuesday. So I'll go in at 11 o'clock. This is just an example of a news trade I'll do.
Sure.
I'll go in at 11. And I'll look for a potential straddle or strangle, for $40 or less risk. And I'm looking to make $40 net profit. Okay, so let's say I'm risking $20 on both sides. I'm looking for one side or the other to make 60. Okay. But I'll enter it at 11 p.m. I'll go to bed and set my take profits.
Okay. So many options, right?
Yeah,
options.
We'll talk about that.
Not even a pun on the word, but literally. Okay.
But very, very simple trade that you can put on.
And again, that's the beauty of defined risk, that you can set it and go to sleep if you want to. We'll come right back, folks. Come on back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tommy O'Brien, Darrell Martin, Bull Bear Binary Option Hour by Nadex. And markets are positive. Dow's up about 40. S&P's up about 8. And just taking a look, I mean, Apple's up today about $1.40. You got Amazon up $5, 0.7%. NetEase is up 4%. Regeneron's up 2%.
How's Samsung doing?
You know, I'm not sure. What's Samsung's symbol? That's so funny that you said that, because that was the first thing I went to pull up during the break. It literally was. Isn't that funny, man? And I entered it and I couldn't find exactly what, and I wanted to make sure. But that's amusing that you asked that. They have some trouble ahead for your head to be there, my head to be there. My friends and I were talking about this weekend when the FCC, or not the FCC, we'll put it out for flying, the flight. Either way, he's saying not don't take it on the planes. You know,
TSA is like, we won't let you on a plane.
Thank you. You know, I was like, man,
I saw that. I was like, oh my god.
Yeah, that's when things become real, and that becomes a public relations battle.
At first it's sort of like whatever, but then all of a sudden it was like, okay, now we won't let you fly if you have this phone. I was like, that's a first.
I know, right? And first they advised that you just turn it off, and then I said, well, wait a second. You know, I don't trust 300 people to remember to turn off their cell phone, let alone myself to turn off your phone when you're flying. You know, that's not so that's going to reverberate. Especially they just had something, I'm sure people may have seen it on Friday, that it happened to be from St. Pete, right around here, I think, where somebody left the phone in their center console charging, and it blew up, and so their car was basically a big fireball. So that was the first headline making its way.
Oh man.
Yeah, and so they have quite a battle.
So does the insurance file that claim against Samsung, or how does that one go down?
I think some lawyers are going to be battling that one out for sure for probably the next few years. As
it's
people,
not my fault. I just left my phone in the car.
Exactly right. You know, I'm sure exactly. But you know, hopefully that people do turn it off, and that nobody's really harmed by it. Because that's pretty crazy when you think about nowadays. Whether it can be in your car, whether you're flying, whether you're just at, wherever you are, if that just explodes in flames, bad things can happen.
Apparently the one that they released to China had no issues because they had a different battery manufacturer.
Interesting, okay.
But the ones that we got all blow up, apparently, or something.
Those batteries are intense, man. I mean, there's been a few times where my dad and myself, we'd had phones, and there's been a few, not close calls, but where they start to overheat, and they can almost like melt the phone, or they melt the charger, and occasionally you ever see where the chargers become a little charred brown around the edges. And I always wonder, that's scary stuff, because in this day and age, I feel like I have 5 or 6 things that I need to charge, literally, and they're only going to go up. Like one of those is I already have Bluetooth. Like a Bluetooth headphones that I like to use while just taking a walk. Those need to be charged. Your phone, your iPad, so if they don't get that right, that's scary stuff for sure.
Yeah, you definitely don't want a little ear thing freaking exploding or catching
on
fire.
My goodness, I know, right?
Now everybody's gonna be afraid of all the technology.
I mean, it's just remarkable that something.
It's fighting back.
I think that just, wrapping our head around it, I think it was easier to understand, right, when it was like these, the hoverboards coming from China, where maybe it's like, okay, maybe they're just cutting a few corners and making something on the cheaper end that they're trying to catch the fad, right, to Christmas and get it out. And I mean, it's brilliant business if you can do it right in terms of just a cheaper model for cheaper cost. But when it's something like a phone that Samsung, one of the biggest phone makers in the world, is putting out, you never think that that's actually where you're just going to risk that type of...
Well, you always have it on, and you always have it charging, and you always
that's
have it with you.
That's a scary notion that, your phone...
Awake.
I completely agree. It's in your pocket, and the next thing you know, for sure. And I think that the bigger problems, and hopefully if anybody out there has a phone, make sure you figure it out and turn it off, and I'd go make sure you get a new one or whatever they're going to do. But I think it's when it's charging is the biggest problem.
They went in and people went in to get that exact phone. And so you go in and they're like, we have to have another phone. So you can imagine people being pretty upset about that. I mean,
I'm leaving that loose-ended as in go, and I hope it works out, but I have no idea because it is such a popular phone. There's no way that they can just replace them immediately or how you handle that.
It's not what they have millions of Note 6s laying around for them and stuff like that.
Right? No, they're not prepared to refund every single phone.
So people are like, I don't want that phone.
And they shouldn't have to take that phone. Exactly. So
there's all these contracts on the phones and everything else, but they're all like blowing up everywhere. And
I bet, and I would bet that if you're an unhappy customer,
would be like producing like crazy to get solid ones out there, but I don't know what.
I would say that they should, and hopefully they do, make sure that you're a happy customer at the end of the day, which means, yeah, there's no way they can just force you to take, a refurbished phone or something like that. Because nowadays, phones, just like you say, I mean, phones are quite an investment when you look at $500 to $600 for a phone for an iPhone.
Easy.
With signing a 2-year contract at least for $100 a month. So yeah, that's quite a tangled web that they need to work themselves out of, for sure. And maybe that's why Apple's up a little bit. It can't hurt Apple to have that type, a competitor having that type.
It's funny because Apple pissed me off a long time ago whenever they changed all their plugs, because I had, like 20,000 things that plug into
the larger one. Sure, I still have an iPad that has the 6-pin or whatever they call it. I don't even know what it's called now. It's been so long, right?
I left and I went to Samsung.
Okay.
And so Samsung does that, and people may go, maybe I'll go back to,
this might make you think twice the next time you have a purchase up.
It will. It'll.
That's what. Yeah, I say it sarcastically, but it should, exactly. I mean, it's funny how public relations.
It didn't get real, though, until I think that you're right. Until the TSA said we're not letting you fly with that on our airplane.
Yeah, there's no spinning that, isn't that, right? I mean, that's just going to reverberate where, okay, you can say there's a small problem, there's not. There's obviously a legitimate large problem, actually, if the TSA is saying that you're not allowed on the planes with the phone.
Yeah, it's like, okay, you can't just go ahead and go on without it. Because you can't travel with your phone now. So that definitely affects some people.
And maybe we'll try and see if we can pull up what Samsung is trading at. Because I did see something as well that I believe Samsung was selling some portion of their business as well for like $1 billion. That had nothing to do with
KRX and KRW. I don't know which one is the official. I don't trade it that much, but just looking at it that's what Samsung picker on Google. We've got KRX and KRW.
I can't find it right now. I'll try and find it again during the break. But that's something to keep your eye on, for sure, even if it's just how it affects Apple moving forward alone. Because, it's so hard in that business, I think, to switch ecosystems. It should increase
their market share.
That's it, and that's what I was going to say. It's so hard, to switch ecosystems in terms of once you're in and used to Android, or used to, really, probably more so, once you're used to Apple.
Yeah.
But if they get people to change, and this is probably something that they'll try and capitalize on, whether they do it noticeably or not, in their marketing.
Well, and Samsung just went to actually a newer, more of a micro type USB, different than the last one they had.
Okay.
And all their stuff, because I have like the VR gear and all that stuff.
Do you? Okay. That is one thing that, as I see the commercials for, as somebody that now has an iPhone, and I used to have Android. I'm going back like 5 years ago, 6, maybe even, originally. But that I'm jealous of when I see those VR commercials with whatever phones that snap into the headset.
It's fantastic.
That's
cool. I sit back. Man. You can watch Netflix. Like, you can be on a plane and you're watching on a big screen.
That is pretty cool.
You put on your, noise canceling headphones. I mean, they got video games and they have all sorts of cool VR stuff too.
Yeah, and, that's the future, man. It is VR for sure, especially when you can just strap it to your head.
But you take PlayStation has one coming out in October.
Do they? So, well, that's good. Maybe I'll finally. I used to enjoy video games and. Time goes so quick. I haven't had a console in a while, and I feel like I've been waiting for the next generation. Nothing separated itself recently for PlayStation and Xbox. All right, we talk Samsung, we talk Apple. We'll look at the markets one more time. Come on back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge show heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMarc's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tommy O'Brien, Darrell Martin, the Nadex Bull Bear Binary Option Hour. And if you haven't tried out Nadex yet, this week, next week may be a great time to do it with the indices moving. You have gold moving, you have oil moving. And I know you love the currencies, Darrell. I know they're moving, and I'm sure that will continue into Janet Yellen. And I'm just pulling up everything as we go here. So, I mean, it's interesting. You talked about from the lower end of where we were overnight to the upper end, it's kind of a full deviation. And we've pulled back a little bit. The Dow's up only 14 now. Go ahead.
Yeah, and everything's flattened out right there, right at that full deviation move. So I look at a deviation high to low, not just from like settlement, because that's the expected movement in a day. On risk model, they built in a 2 deviation move, like on risk models at forex brokers and futures brokers and things like that.
Sure.
And my Thinkorswim uses a 2 deviation model for expecting, what kind of risk to expect, what kind of exposure they have in the market with all their clients, and knowing that most days will be a 1 deviation move. So when things get bad, 2 deviation move, is the type of thing they look for. So, but over 70% of the time, you're going to stay within that 1 deviation move.
Sure, and that's for people unfamiliar. That's kind of like the bell curve that you're learning, whether it was in high school or college, where, the big part of that bell curve is going to be under, X amount of percentage of the time, which is 1 deviation. And then as you go out to each side of that bell, it kind of flattens out. And that's where, a certain small percentage of the time, you're going to go X amount from the mean or the, where you were last night. You could call it from the close. And I'm a big numbers guy, Darrell, so I like those numbers. I know my dad does, it's because guess what? If you trade every day and you do that often enough, those numbers come from basically the law of averages. That's where they come from over time, that those statistics are going to matter.
Exactly.
Yeah.
And so it's an objective. They're not saying this. It's a very objective, not a. It's objective because it's the group, it's the mass market's opinion where everybody's putting their money where their mouth is.
Yeah.
So on these deviations, so there are deviations that I pull from implied volatility, so that's expected move, and that expected move comes from pricing of options, which is what people are willing to pay to buy or sell an option. So it's literally the masses, choice on the value of market.
Yeah, and that's the wisdom of masses, right? Is that the phrase? When you look at the market as a whole, as long as it's a liquid market, that the reason why it's going to set itself so close to where it should be as in terms of the odds, the probabilities, is because whenever an opportunity presents itself where it's not at that level, the market is then going to provide that opportunity to the smartest investor that's going to realize that, and guess what? It's going to recalibrate itself to kind of closer back to that supply and demand of where it actually should be, which would reflect the proper odds. Exactly. If that makes sense to go through it, for sure. So we'll see where we end up. You know, it's too bad in that we came on the air and the market had kind of gotten most of the movement in the last hour and a half in terms of starting off Monday morning.
Sometimes we get that right as it comes up.
You know, what's interesting is Friday moved quick, and I didn't have any active positions on for the whole day, and so I looked away, and before I knew it, I looked back, and the Dow was, of course, you know, approaching 400 points down. So we'll see.
Friday was a beautiful day.
That was amazing. It was. I had to do, I mean, quite a double take in terms of not really expecting that in our morning program. But, you know, with I think the rates looming, big things can happen, I think, as the market begins to accept maybe that we could be going up. Maybe, you know, we are going up. It's just a matter of when.
Right.
I think that's a tough realization. Exactly. Now, could it happen in 9 days? It could. And, you know, maybe it really could, because it might be harder for the Fed to go up right before the election, just because, and not for any type of conspiracy. I mean, their job is to provide stability, and that just might be an unstable
This
move.
is what Goldman has predicted all along. They predicted
it's in play. I mean, it's a possibility, and any trader should recognize that. Darrell, thanks for joining me, man. Look forward to talking to you on Friday, and we'll have a lot more to talk about, I'm sure. Thanks for coming by, folks. Basil Chapman coming up, swim lessons, Dave White, Steve Rhodes. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.